Okay, Rohan, are we good to go?
Sir, after the presentation.
Okay.
Sir, you can start the webinar.
Yeah, or all the participants are already online.
Yes, sir. Sir, we are live. Ji, sir, you can start the webinar.
Done. Thank you, Rohan. Good evening, everyone, and greetings from Association of Financial Advisors of India. I am Sanjeet Kumar, Executive Director with Resurgent India Limited. I head the Project Appraisal and Monitoring Division of Resurgent India. I have been a banker and also with rating agency for nearly 10 years and another 10 years with banking system. I'm happy to host this show today. We have eminent panelists with us. Mr. Vinay Matthew, who is the founder and CEO of Fairsend. Mr. Ashok Mishra, who is General Secretary. He has been in the Bank of India as the in the great team, and as well as we have Chaitanya Shahji, who is being a practicing CA and is the CEO of Chaitanya Shah and Company. We will be going through the panel questions answers as we go through the panel discussion. We will have some query session at the end for the participants to raise their queries with the panelists. Before we progress further, I would like to set the tone or the background for the session today. And the topic for our discussion today is the financing of the MSME sector. The importance of MSME sector for the economy and all of us is very well known. I think I'm sure all of us are well aware of how important this segment is and the kind of challenges that this segment has been going through in the past. And therefore, the need for these kind of webinars to come up with some solutions, some brainstorming to help the MSME sector come out of the challenges that they are going through today. So if you have to look at some of the numbers, the MSMEs in India generate more than 8% of country's GDP, nearly 45% of the overall manufacturing output, nearly 40% of India's total exports, and most importantly, nearly 40-45% of the employment is being generated through the MSME segment. And that makes it a significant segment for all of us to look at and see how best we can improve this segment. Okay, so there are various, government has been coming up with various programs to support the MSMEs. However, there are challenges, which, as we say, that the receivables of the MSME segment continues to get delayed, and that is a huge issue for MSMEs. The payments getting stuck up in the receivable cycle. So typically, the working capital cycle for most of the MSMEs get stretched because they get squeezed from on both ends. When they are selling it to the large corporates, the payments get delayed for and generally these large buyers generally squeeze the MSMEs and delay the receivable cycle. At the same time, when they are buying the raw material, they hardly get any credit period from their suppliers. So they are squeezed on both ends, and generally we have seen that the working capital issues has been a big challenge for MSMEs. A lot of strain in the system comes up because of these issues, and there is a need to think through, come up with some innovative solutions how best this working capital challenge for MSMEs can be resolved. Then also, of course, in terms of the financial literacy, understanding of the banking system, coming up with what kind of products is best suited to them. So all of these things is still a challenge for MSMEs. Even we, in our day-to-day, when we interact with a lot of these entrepreneurs, we do sense there is a lack of understanding. They need helping hand, whether it is having their P&L balance sheet in the right shape, which can be assessed by the bank or the lenders. From there itself, coming up with the project, the way the instrument can be structured, whether they want to go to the banks, whether they want to access some other market, or whether the equity is required, whether debt. So the mix of the debt equity itself is a challenge at times. How best it can be, even if it is a bank loan, how best it can be structured, that is also a challenge. So all of these places, they need some support from the financial market experts. And there is a need to improve this understanding, disseminate this kind of knowledge to all so that they are better equipped when they access the market. So this webinar that we are, of course, we will focus on the hurdles that MSMEs are facing right now in raising funds to meet their working capital as well as their expansion requirements. We are expecting that during our discussions, we will come up with some ideas. We would also like to hear of the benefit from the experiences of our participants as well. So please feel free to come up with your ideas. Maybe you can, some of the question answer session can also help us to, come up with something new which we can recommend, to the government authorities, to the banks, or to the system as such, which can be, implemented in future for the benefit of the MSME segment. So with this, I think I will like to get started with our session today. We have Mr. Vinay Matthew, just to elaborate on his introduction. He is the founder and CEO of Faircent.com. He is an industry veteran with 25 years of experience in scaling up operations and delivering profitable growth for internet business. He is the founder of Faircent. It is India's largest peer-to-peer lending platform. He has pioneered the concept of online peer-to-peer lending in India. Vinay has been instrumental in the company's growth since its inception. His long and successful track record in driving business and revenue growth for internet business has helped him establish Faircent as the largest and also the first P2P lending platform to be certified as NBFC P2P by the RBI. Vinay holds a master's degree in business administration from the Institute of Management Studies, Devi Ahalya Vishwavidyalaya. He has held leadership positions with several renowned organizations like Indian Express, Reddit.com, CFI, Bennett Coleman and Company over the course of his career. Okay, sir, Vinayji, I think with your experience and the kind of company that you are setting it up and you have been developing till now, there is a lot of to gather from your experience and to benefit from the path that your company has taken till now. So one question which definitely comes to our mind is how is this technological innovation helping the MSMEs? I mean, the one key challenge which MSMEs have been facing in the past is in terms of when we say the access to finance, to the normal banks, there is always a disconnect because their assessment of the normal corporates is a particular mold, which sometimes doesn't fit in correctly with the MSME segment. So, I mean, that is where, the expectation has always been that is the technology-driven companies, can they come up with a new model to assess the MSME's credit profile? Can that help us? So, if you can elaborate on it as to how your company has been working on this path, what kind of technological innovation and the approach your company has been taking up. If you can elaborate, it will help us, all of us.
Yeah, so thank you very much, Sanjay ji and my co-panelists. Faircent has been peddling for the last 9 years, close to 10 years now. We are the largest peer-to-peer lending player in the country. Now, how this is different, okay? And why did RBI decided to kind of regulate a business like ours, right? So what we do is that we have two sides, okay? There is a demand side and there is a supply side. So the demand side are the borrowers, the supply side are the lenders, okay? And the lenders that we have on our platform are people like you and me. It's not institution. There are people, a large number of people who come and put money on the platform, and this money goes out to these borrowers and in turn makes return for the investor who's putting the money, right? So that's the model. Just like any other two-sided marketplace, be it Amazon, Flipkart, Uber, Ola, Swiggy, Zomato, we are a two-sided marketplace, a large number of customers on both sides, right? So the moment a structure like this, comes into play, a lot of things change, right? So what we are doing here is trying to kind of get the finance directly from people to people. Okay. Otherwise, what happens is that public would deposit the money in the bank. The bank would further lend to another NBFC, and the NBFC would reach out to the MSME or micro SME to lend, right? So it changes a couple of hands, and that's one of the reasons the cost goes up. Okay? In our journey, the cost we are able to reduce primarily because we are able to we are not incurring those costs. So one is the capital cost, which is one of the reasons that it increases. The other cost is the the fixed cost, which a traditional setup would have, right? It would have branches, it would have people across the country and all of that. That also kind of increases the cost. Now, with our structure, the money is seamlessly moving from the lender to the borrower. We don't have any branches. We operate online, and we cut across thousands of cities in this country. Okay? We lend out to people, in villages, in smaller towns, all of that, right? So it's there, right? Now, so why this starts to make sense? Okay, there are two reasons for which banks are not able to lend to a large number of micro SMEs. It's not because of they don't want to. There are two, I think, what I understand from whatever experience that I have in the banking financial. I'm not a banker. The two reasons for which the banks are not able to lend. One is the data insufficiency, right? Lack of data is number one reason, because the decisions are made on the data which is given out, right? So if the data is not there, you can't make a decision. And same goes with the bank, right? Second is with respect, and however you pick the data, right? So you can pick the data online, you can pick the data offline, whichever way you are picking up the data. If your data sources are limited, you will not be able to kind of do the lending. Second is the structure lends itself. Does it make sense to lend somebody a small amount of money, right? For example, we have millions of people coming onto our platform, and we've seen the requirement that they have is not large, right? It is under 10 lakh rupees. So majority of India and the small enterprises, as they call it, or a small businesses, mom and pop shops, retail shops, and all that, they don't require a large amount of money. They require a small amount of money. And these retailers are the ones, if they grow, they will put few people under them. There'll be employment, and tomorrow they can open another shop if the finance is given to them on time, and they can hire more people. And that's how the economy grows, and that's how the country grows, right? So these 30 million micro SMEs which are there, how can you empower them? You don't need a large they don't need large amount of money. They need very limited amount of money. But the structure currently which is there, it's addressing MSMEs or SMEs which are have a requirement of little larger amount of money. And same reason, right? So one is the cost does not add up to kind of lend itself to a small ticket for a large organization like a bank. So tech companies are able to do it. If you can lend 1,000 rupees and make money, then you're using technology to kind of lend, right? So if you're not able to kind of make money out of lending 1,000 rupees, that means you're not using technology to kind of make money. So I think that's two reasons. One is the cost reason, because of the structure of the organization such that the cost does not allow them to kind of lend to a smaller ticket. A second reason is that the data itself, right? There are two reasons. Now, if you can solve for these two reasons, I think you pretty much reach out to a larger section of the people, right? And everyone is trying to solve that. In the last 5 years, all banks, all fintechs are trying to solve that, right? There are a lot of tech play which is happening. There are a lot of organizations which has come about in this space, not just lending, but aiding the lending process. For example, can I make the data availability to the bank so that they can make a decision, right? Can I make it so seamlessly so that the bank can make a decision, or a company like ours can make a decision, right? So there are a lot of organizations which has come about, which has made decisioning easier and easier and easier. So in the next 5 years you'll see it much easier. Larger penetration will happen, right? So let me give you an example. For example, bureau. When we started our journey, the bureau data was very, very little. You couldn't analyze the data. You couldn't really make a decision out of it. It was just some points where, customers taken loan and there was some score. Today, if you look at bureau, you can actually make a decision with respect whether you want to give the loan to the guy or not, at least the initial decision, just by looking at the bureau. There are so many trade lines at the bureau today that decision can be made. And you can, put weightages around those trade lines and decide what is the kind of rate of interest you want to give to this person, right? So the data is what is becoming very, very clear as a key element, or the new oil, as I call it, for making decisions, right? And tech companies are able to kind of do that, integrate, do APIs with these organizations and bring about that data and make a decision. I think on the cost side also, and I feel that more data will lend itself to, getting the loans non-collateralized also. I feel in 10 years from now, you'll get 1 crore rupees or 2 crore rupees without any collateral. That's what my belief is, right? The old way of lending, of collateralizing the loan, will go away. We have started to seeing this in the European and US, US and in the Western countries, and the same trend will happen in India as well. As long as your data is very, very strong about the past behavior, about the past loans that you've taken, how you've done the repayment, and all of that, I think you're pretty much there. Talking about the models, okay, today various models are getting created basis which lending is happening. Okay, and they're not trying to experiment with 25 crore, okay, or a 20 crore or a 10 crore. They're trying to experiment with a couple of lakhs, okay, and that's what the requirement is. Okay, since the structure is that the lending has to happen a larger ticket, right? Because the cost structures don't add up to kind of do a smaller ticket, right? So the tech companies can do it. It's great, good news, right? So I think one of the things that we have seen happening on alternative space is that through the bureau you can estimate the income of an individual, especially on the salaried side. You can estimate the individual's income on the business side also, right? So if there is a home loan, what is the EMI that he's giving for the home loan, and that can estimate what's the kind of money you're making, right? So there are income estimation models today, and just home loan, just an example, right? Even credit card, even any loan that you've taken in the past, the kind of loan that you're taking, the amount of money that you've taken for a housing loan, all of that determines what kind of income you would be drawing to kind of have that loan going, right? Now I can make a decision basis the income, by creating that model around income estimation and give a loan, right? So those models are coming up. Then there are models around alternative data. There are a lot of new stream of data coming about, and we all know this, right? Because most of us today are using a lot of services through our mobile phone. Okay, come to think of it, 5-7 years back, or maybe 10 years back, we're not even using anything for that matter. Okay? Look at the shift which has happened in the last 10 years, right? Right from reading a book to ordering something to kind of booking a ticket, anything for that matter, you're doing it through your phone, okay? Which was not there 10 years back. That has changed. Now, with that change has brought about a lot of data, okay? And this data is critical. And this data is called alternative data, not just the bureau data that we're talking about, but also a lot of alternative data, which is coming about. And we are able to kind of make a decision based on that. But the spends, the lifestyle, utility bills, the check bounces, the reminders, SMS data gives you a lot of information about customer in terms of his transactional data, also the location data. If he's taken a loan and is moving around a lot, you can get to know whether the customer is kind of moving on. So a lot of data is coming about to kind of make decisions. I think today, whatever was there earlier, about supply chain, invoice financing, trade financing, working capital, all these kind of loans organization had kind of made to give large organization these credit facility. Today it's all happening, the same thing happening through data in smaller organizations. Fintechs are doing a lot of supply chain finance, a lot of invoice financing, trade financing, working capital financing, small ticket loans to these small looking at the smaller data. Paytm gives so much of data. UPI is giving so much of data. So there is enough and more data for you to make decisions on the alternative space also. The other thing which is very interesting, which is happening, okay, and I'll just touch upon this. RBI is creating a very beautiful ecosystem. I know, I'm sure the panel here knows that, and people also locked on know. We're creating a very beautiful ecosystem called account aggregators. Okay? Now, in this account aggregator format, the way it works is the banking transaction data will be available for you, right? For the lenders who want to kind of lend. And it is, for example, if ICICI has that transaction data and HDFC wants to lend, they can see that data. Okay. Or for that matter, if Fairfield want to lend, they can see that data. So the bank statements, savings account or current account, whatever that account is, across the banks are going to go live on the network, and you can see that data. And the government is going to give the access to kind of seeing that data. Now, to make that available, there are a lot of players working around this. Okay, and data is also coming from various streams. Okay? Gradually, what will happen is the account aggregator framework, which the government is trying to kind of put out, will make all financial data available for sharing. All financial data, okay? Including tax data, pension data, data of if you've invested anything, securities data, mutual fund or brokerage or whatever, the insurance data, all of this data of consumers will be available. It will also expand, I think, beyond financial data and sectors. Allow healthcare data, telecom data. All of this will be accessible to the individual via account aggregator. So here's an entire piece where all my data will go and sit. Okay, alternative data, all kinds of data will sit. If a bank wants to lend me, they have to take an access to this data to make a decision. All right. If I give the consent, they get the data and they make a decision and lend me. Right? So this is coming up, and there are a lot of people working around this. We are also equally participating in this initiative. The idea is to kind of co-create all of this together and create a beautiful ecosystem. And this will give a huge impetus with respect to the lending which is going to happen in this country.
Great, sir. Thank you, sir, Vinayji. I think this is really nice to hear from you. And of course, this is the way to go in terms of how best we can analyze the data and make sure that the credit is delivered to the needy by the use of the data. I think this is already coming up, and we expect a lot of changes to happen. It will also lead to some changes in the behavior of the borrower as well, because he knows that everything that he does, every transaction that he does is being tracked, is being monitored, is being getting converted into data. So earlier some of it, some of these transactions were hidden somewhere, not being open to the lender. Now all of these, once these platforms are really up and running, all this data aggregator concept is live. Even it will lead to some change in the behavior of the borrower as well, because everything will be there with the lender. And at the same time, it will make it easier for the lenders to make these lending decisions, because he has all the information available to quantify the credit metrics for the specific borrower. So it will be a win-win situation for both. I think we are still at the nascent stage for this industry. A lot of things, a lot of changes still has to happen. But it's good to see that we have these platforms available right now for any MSME customer which is in dire need of funds and needs something right quick and fast without going through the hassles of giving a collateral to a bank, going through the entire process. Here we have something which can pick up the data or his credit history and make some decision quickly and make the cash available to him to meet his requirements. So I think it's good to have these kind of platforms available to support our MSME customers. Moving on, I think it's good to introduce Dr. CA Chaitanya Shahji. I think both the doctor and as well as the CA both lends a lot of weight to you as a person. I'm sure, and with the background that I see, there's a lot to hear from you. So he has been very, I think his PhD is in MSME segment itself. So that tells you, his interest in this particular segment and why he is so important for this discussion today. Because the kind of experience that he has in this industry is relevant for us to know his views. With all, I see his entire background, his entire work for 30 years has been in this field only, on the SME segment only, largely on the SME segment. So, sir, will be really great to hear from you some of your perspectives. I think it will be good to understand. If you can just throw some light from based on your experience, what has been the challenges? What challenges is MSMEs face today? If you can just broadly touch upon that. and then coming up to some specific questions that I had in mind, specifically what can they do to strengthen their balance sheet. Most of the time when they approach the banks, the balance sheet P&L is not really in a shape which bankers can accept, and that itself takes some time to process their application. So if there are some ways to handle that, that will be good. It will be good to hear also from you on some ideas that or your understanding, your experience, how this co-lending model, which has picked up recently, how it has been working, how effective this model has been for the MSME lending in general. And then again, if there is some way that we can, give some ideas to MSME segment, how to keep their business and personal account separate, how not to mix it up. Otherwise, it creates a lot of information gaps and unnecessary suspicions.
Sanjeet, there is some problem with connectivity at your end?
No, sir, we can hear you.
Shall I start?
Sure.
Okay. Great. Sanjeet, thanks for your introduction. And also, I thank Resurgent for the opportunity to talk to the group of people on financing of the MSME segment. I have been basically, as my predecessor said, Ashok, I'm more from the demand side, not so much on the supply side. So I would start sharing the screen, and I will discuss various points related to it from the screen. Hope everyone is able to see the screen.
Yeah, it's visible. Thank you.
It's visible, right? I will just, sorry. I have made it full. Okay, now I'll start my presentation. The fundamental key aspect and the features of the MSME funding are like this. MSMEs have a very peculiar pattern, in the sense that it starts with an idea stage, goes to a startup, then goes to a micro stage, small scale, and medium scale. Hence, what is happening is that the different stages which are there and different size of the organization, which is causing a huge limitation for the owner. Because owner in the initial stages doesn't have enough resources nor enough kind of talent himself or understanding of going about it. They are normally either from marketing or from the technology side. Finance is sort of a new bird for them, and they are little scared of that particular field, which as we go along, we will get the idea about what I'm trying to say. So this thing has to be kept in mind. And objective of financing. Basically, whenever finance is taken by any business entity, it is for growth, and sometimes it is for seizing the opportunity which is there, available. Sometimes, say for example, post-COVID or during COVID, some people found And there are some excellent examples whose demand for, say, certain type of products, hand wash, etc., has gone up tremendously, multifold. So you need to expand. You have to expand in a big way. Now, this is an opportunity and where the funding is required. Suddenly, there could be some changes in the import-export policy, market trends about certain things. And this is where the objective of funding comes. Otherwise, also, your funding is required for growth. Maybe you are having a capacity of 10 tons, you want to go to 15 tons or 20 tons over a period of time. So these are the objective of funding, which is very important. And this is where I find, and this we will discuss in the further slides, where the MSMEs face a problem. Then we come to the different players which are there. There are three types of players. One is the supply side, which is the lenders and the investors, if we talk of the equity also. Then on the demand side, it is the MSME segment itself. And the third is the regulator, RBI and other regulatory bodies. Now, as you see, lot of things are coming out with the NSE and the other nexus which has been going on. So these regulatory bodies are becoming very, very conscious and are very active in a very positive manner today. So these things we have to keep in mind when we are talking about the SME, particularly the limitations that they have. Unlike any large corporate, they have a lot of limitations. So this is the first introduction. Then if we study the entire MSME financing aspect, there are four key aspects. First is the assessment of the requirement. Second, the MSME owner understanding what are the different sources for the MSME funding and evaluating those different sources and which source could be the best source for him, considering his requirement and his organization situation. Third is the way he is presenting his case to the financer, the people who are going to give him the money, whether it's a bank, whether it's a private funder, or if it's something like a equity, if you are going to a private equity or a venture capital fund, those type of people. So you have to have a proper presentation. We'll be dealing with each of these aspects separately. And the fourth is the post-completion analysis. That whatever purpose for which the funds were taken, what happened with that? Now we'll deal with each of these aspects separately. First is the assessment of requirements. Now, what I have found in my almost 45 years of experience, 20 years with large corporates and 25 years with the SME segment, I find that the large corporates are far better placed than the MSMEs. The assessment of requirement is done very scientifically in large corporates. Whereas in MSME, it is not done in a scientific manner. The capital requirement for the projects and the funding for the same, how it should be considered, what is the capital requirement for the purpose of expansion of the business and all that. Now, all these things I have found over a period of time that the decisions are made more on an ad hoc basis or on a gut feeling. There is no systematic working and analysis of the same. Second, same thing is applicable to working capital. When you are making an assessment of the working capital, what is your current assets and current liabilities, different components of the same, how they are going to behave considering the economic environment and your business environment in particular, those scientific data, I have rarely seen anybody trying to work on it. Third is cost benefit analysis. When I am trying to inject funds into the particular business and particularly in an MSME, I must be absolutely clear about my way in which I'm funding and the reason why I'm funding. Now, unless I understand the cost benefit analysis, my long-term objective of creating a sustainable organization in the long term is not going to work. And these areas where I'll make my sweeping statements toward the end of the presentation. Second is sources of the funding for MSMEs evaluation. Now, this is where the role of the MSME owner, or if he has got a partner, or somebody who is a very sound advisor, is required. Whether he should go for debt or he should go for equity. Normally, when a MSME unit is in the initial stage of its working at a micro level or at a small scale level, most of the time funding comes from his own source or maybe from his family, friends, and others, which is more towards an unsecured loan. Now, all these things he is not able to understand. He needs a right advice. But as he grows, as he moves at a upper level in the small scale as well as in the medium scale, he cannot be living it to chance. He must have a scientific study or take a proper advice on this, that what is the debt and equity, what are the pros and cons of each financing scheme, and which is the right one for him considering his maybe 3 years or 5 years requirement. Second is, very important is the different aspects in which he should evaluate. One is the security. Whether he is in a position to provide the security which is being given or which is being asked by the funder, the one who is going to lend him the money, whether he has the enough security. Second is rate of interest. Now, with the way the banking sector is today, there are different rates of interest given by different banks, different institutions. Now he has to basically look at what is the rate of interest and how it will help him in improving his bottom line. Third is the tenure, whether he is getting sufficiently long tenure or not. And the fourth in other terms and conditions which are applicable with the way he is going to borrow and the way those terms are going to be applied. Third, very important, as my predecessor said, the MSME is coming out with various schemes. And unfortunately, my experience says that most of the MSME owners are not aware of what kind of schemes are available and the way they really need to follow it through. One is regarding the CGSMT or something, where there was no need to give the guarantees, or the security collaterals to be given up to 1 crore or 2 crores kind of a thing. Now, this is one where you really have to pursue and find out and maybe make a proper presentation at all. There are other concessions which are available that also the MSME owners should know or try to work on it and understand the schemes which are available from the government. Fourth is relevance for future growth. Whatever schemes that he's going to look at, whatever funding he's going to look at. Now, I'll give you one classic example. With no, I am not making any critical comment about anything working. Now, most of the MSMEs sometimes go to a small cooperative banks. Now, if you are looking at your long-term growth, say today you may be 5 crores, but 3 years down the line, you want to go to a 50 crore, whether you need to go to a cooperative bank, whether you need to go to a nationalized bank, or whether you need to go to a private sector bank or to a foreign bank. Now, these all becomes very crucial decisions in the long term. You may be in a position to look at certain short-term benefits, but it may not help you in the long term. So these are the things which the MSME owner should either look at if he understands or have a very, very sound advisor who can give him this advice. Third is presentation and follow-up. This is one area where again, I have my own views. See, making a strong case with the banker, giving him a data which will generate the confidence of the banker or of the financer. Within in 2 or 3 first meetings, the person who is going to finance you must develop a very, very positive vibe for you. That is what is called as credibility building. If you have built a very strong credibility through your documents, through your data, and through all your personal communication, it will help you in a big way. All your data validation should be very clear. Timeliness in terms of providing the data to the financiers who are going to be there. This will all help in building a credibility, which is very important. Third is end use. Fourth is end use monitoring. How you are going to monitor. In large corporates, there are 2 things which are being observed very clearly. One is the cost overruns of your projects, and second is the time overrun. If you are able to understand this very clearly in a small, even in a MSME kind of a segment, at least broad parameters the owner should control, that this is the way I am going to use my funds, and within this particular timeline, my project must get over. And this is how the benefit should start flowing in. And estimated benefit and the actual benefit should be monitored somewhere, so that he is able to see that the whatever funds are injected, there is no free lunch. Whatever funds we are going to get and invest, it is all going to be at a cost, and for which we will be paying a very heavy price, and which we saw with so many MSMEs paying a heavy price for not monitoring it properly. Outsourcing professionals. Now, this is where, because as I said, MSME and owner limitations are tremendous. As a result, they may and they should use the outsourcing of professional, right type of professionals who understand the MSME working, who understand the MSME limitations, and is in a position to guide them. Because what I have found over a period of time, that the finance function is very peculiar in case of the MSMEs. When they are very small, the finance function is used only for the purpose of compliances, legal compliances, filing of income tax returns and GST returns. Beyond that, they are not able to understand. Second stage, when they come, they are using the financial statements for the purpose of raising funds. Still, they do not understand fully the implications of financial statements. But third stage, when they are going beyond 20, 25, 30, 40 crores and all, they must use financial statements for the purpose of managing business. It is not just compliances, but the finance function has to help them in managing the business in a proper manner. And that is where, if need be, they should outsource the financial professionals. My favorite quote, businesses don't plan to fail, but they fail to plan. And this is something which is very important for the MSMEs to understand. I'll give you, Sanjeet, do I have some time?
Couple of minutes more, sir. Should be okay. Still be okay.
I'll very briefly touch upon these 3 cases. One is a logistic company. In very short, I'll tell you, they needed about $1 million for private equity funding, but they were given $5 million. And they landed into a very serious problem. Second case was where the owner was a high-tech from USA. He had a wonderful understanding about the technology, but he kept on investing all the money in the technology, kept on expanding without looking at the cost-benefit analysis of the investment. And as a result, the unit had ran into problem. Third is pharma company, again a person coming from USA. He had a wonderful project, all multinational pharma companies were there, this thing, he was making rubber stoppers. And unfortunately, because the business was not, working on to the full capacity and monitoring the financials, they ran into problem, and then they had to take the corrective steps. I think with this, I'll end my presentation. Anybody have any questions or anything? I'll be glad to answer.
Thank you, sir. I think it was really enlightening to hear your views. Your experience, I mean, clearly shows that, yes, there's a lot to learn from you, a lot to benefit from your experiences. And it's really, important for the way that you have highlighted in terms of picking up the, one is understanding, planning for yourself, planning for the financial needs that you have, not just a short-term stopgap arrangement, but really taking a longer-term view and planning your finances, taking the right advisors, assistance of the advisors, because most of the time these entrepreneurs are either the technocrat or somebody from the marketing background. I mean, that you are absolutely right in saying that. And most of the time they lack that financial acumen to understand their financing need, how best it can be structured, and there the financial advisors, picking up the right financial advisors is extremely important. And of course, the importance of planning is key. When moment you're looking for finance, you need to plan it well in advance, structure it well, go to the right banker as well. I mean, whether you're looking for a cooperative bank or public sector, your long-term plan. It's really nice to hear from you, sir. Mr. Ashok Mishra. He comes from the public sector bank background. He has been a DGM with Bank of India and field. He has been looking at MSME sectors in terms of the credit assessment and as well as how the funding should be done to MSME sectors, structuring the loans. It will be good to get benefit of your experience, sir, in terms of the challenges that the MSME segment faces today. What has been your experiences and how best they can plan for going ahead. Some specific questions that I would like to request you to address is in the current environment where we are looking at the interest rates going up. I mean, it is already the interest rate cycle has already reversed. What the MSMEs can do to keep their interest outgo lower, and then one specific challenge which MSMEs face is in terms of their receivable management. That despite the government policy which prohibits large corporates delaying the payables to the MSMEs beyond 45 days, but this has really not been practically getting implemented. MSMEs are really not getting benefit of it. At the same time, in terms of what best we can do to improve knowledge within the MSME segment so that they understand they can pick up the right products, right financing products which they need, whether it is going to the right bank, whether the right product, or which kind of loan they're looking at, whether it is a working capital loan, whether a term loan, sometimes that itself becomes a challenge for them. So what can be done to improve this kind of literacy within the MSME segment? We'll be happy to hear your views, sir.
Thank you. Thank you, Sanjeev ji. I'll go right over. I had prepared a presentation, so I'll just put it on the screen. But I'll be touching only the points which will be relevant from today's point of view. Are you able to see this?
Yes, sir. We can see your PPT.
One second. Yeah, so I'll be touching only some of the points which are important. And then I will address the 3 points which Sanjeev ji wanted me to touch. Now, SME segment has, of course, I as a banker for over 3 decades, and also for some time as an entrepreneur before I went to the bank, and also as a OEM, I was working for the Tata Steel for some time. I was an entrepreneur with a steel plant for some time, and then I became a banker, and well over 3 decades I was working there. My experience in the bank dealing with the SME segment, the applicants who used to come, the customers who used to come, I found that a majority of them were not very well informed. They belonged, many of them were very young, very middle-aged, not having much of information or idea. So they had, the bankers always depend upon the information which is provided to them. They need paper, they need documents to sanction. This is something where the entrepreneurs lacked. As my predecessors have already told, that papers will be necessary. So very basic and simple things. There is a noise. I'll just allow me 1 second. Okay, so there are very basic things in which the entrepreneurs were not able to provide the papers. For example, there is an entrepreneur who came to me. He had spent quite a lot of money in his fixed assets, in his land, in his building, but had not capitalized it. Okay, he had taken a lot of money, as Mr. Chaitanya has said, from his friends and borrowers, but it was not appearing anywhere in the balance sheet. Okay, 50% of the capital can be, as per the extant guidelines, be treated as unsecured loans, which will be quasi-equity and can be considered as equity. So bankers need equity because as per the extant guidelines, you must have a debt-equity ratio and a net working capital, which is, or a margin, which is direct, relationship with the capital which you have. So it is important for a borrower, for a proponent, for an applicant to come up and present papers which the bank can entertain. So it is important for him from day one, and he doesn't know. There is, I will give you a story, a small example. Recently, again, like Mr. Chaitanya said, a person straight away from the US. Okay, so US he comes, he's a doctorate in agriculture, and his project was hydroponics. Hydroponics is having agriculture without earth. It's only on water, fortified water through which plants will grow. It also, facilitates pisciculture. So he comes and he had spent well over 3 crores. But his, accumulated losses were also over 3 crores. So as a result of his net tangible net worth was negative. Now, in this sort of a case, when he comes, his unit is called as terminally sick by a banker, and he is no more eligible. He has patented his product. He was working there in the US very gainfully. He came to India. He is having a team of people who are highly motivated, but all again technically perfect, not having any idea about banking or accounting. He spent 3 crores of rupees. Imagine young batch of about 10 to 12 people. I interacted with 3 of them in a consultancy session, but there's nothing which could be done about that. Now, if at all there is some, angel investor or a equity participant who could come and invest equity, that's the only way how he can be saved, not otherwise. And then wherever it is, venture capitalist or somebody who's prepared to invest the equity, he will need his homework to be done, and it becomes very difficult. So here, typically what could be done is that you have to work the IRR, and the feasibility of the unit, the profitability over a period of 7 to 10 years time. Okay. Now he doesn't have the idea of how to deal with this particular case. So mostly bankers have information asymmetry. They do not have idea about how to project the capital. You know, you could capitalize immovable assets. You can capitalize also the unsecured loans and present a balance sheet which is acceptable to the banker. Number one, presenting papers to the banker which are acceptable to him. Okay. Communication is another very important thing. Because I find that the banker is in a haste, and so is the borrower. He's also in a haste because he is in a dire necessity, and the turnaround time is nothing much to flaunt about. Okay, the turnaround time is, or leaves much to be desired. So obviously both are in a haste, and there is no time for them to find about each other. So here there is a necessity for the communication between the bank and the borrower to improve. I will just have to tell you that factors which are important to be assessed in a interview between the banker and the borrower. I think, well, there is a case, I mean, the other day I was saying that what is it that is very important for a banker to assess in a borrower. Just let us think for a moment. What is important and what contributes to the success? Is it his money which he's got, or is it something else? Now, if I talk about, let us say that Steve Jobs, when he had not seen the light of the day, similarly, Dhirubhai Ambani, probably two most successful people of the world, if these people would have gone in their young days before they entered business to a banker and requested for financial assistance, whether they would have been given the financial assistance as per the present module? No, because they don't have the paper, they don't have, the financial position which add up to a to a viable project. So what is it? It is the intent of the person. It is the capability of the person. These are the two things which are very important. The intent of the person and the capability of the person. If he is sincere, if he is capable, and he is qualified and experienced, he can achieve it even if he hasn't got the financial background. Now, the present credit rating models which are there to assess, first of all, you have to assess. And how the bankers assess is that they have a credit rating system. So the credit rating system mostly depends, and bankers are very comfortable in, assessing the financial part of it, whether it is debt equity ratio, whether it is current ratio, or whether it is the DSCR. They're very comfortable with it because the calculator adds up and it is very, very clear. But when it comes to the, the non-financial factors, the banker is not at all comfortable because he has to, and what happens is he sort of maintains neither too high nor too low attitude and gives them, 65–70% over there. And today in a SME credit rating model, almost 50% is a non-financial factors, very correctly done, because they have understood that a fresh, probably IIT graduate or a, engineer or a doctor or somebody who wants to become an entrepreneur, he may not be having the financial ability. And if he hasn't got the financial ability, nothing should stop him if he's otherwise eligible. And therefore, the credit rating models have given almost 50% this thing to, weightage to the non-financial factors. That is the capacity of the person, the flair of the person, the experience of the person. So all these things. And we have to be in terms with, comfortable in assessing and giving them the marks and weightage to these factors. I will just go through. What is important is for the banker to see the sources of funds. And another important thing is that they do not have, the present SME model with the CGT MSE up to 10 lakhs, there is no necessity of any collateral at all. And up to 2 crores, you can keep up to, this 10 lakhs can be diluted to 25 lakhs. And up to 2 crores also, there is no need. The CGT MSE will be up beyond 10 lakhs, you can take collaterals, but up to 2 crores, the CGT MSE coverage will be there. So the question of collateral is not important. And Now the ELGS, the Emergency Line of Credit Guarantee Cover of the Government of India, it provides for, for outstandings up to 50 crores. So now the collateral need has got diluted, but the question is that you must present your case to the banker properly so that, and you choose the product. And about this particular product, the entrepreneurs very often do not have the correct idea. So here, the importance of the collateral, what I wanted to say is that is no longer there, but for going ahead with a good bankable scheme, a feasible scheme without the collateral, you must present your case properly, number one, and number two, you must also know which is the product you are opting for. Now, coming to the points which Sanjeev ji has told me, when you want to keep your interest cost less, there are certain things which I would suggest. Number one is that there has to be a cash credit component which looks after your working capital, so that day-to-day sale proceeds when you are depositing on that day, because the interest is calculated on daily products. So when you are having a cash credit account and you are depositing the money in the account at the end of the day, you can do anything you feel like throughout the day. At the end of the day, if you're depositing the money, then the outstanding reduces, and thereby the interest component reduces. The other things which can be done in order to reduce by an entrepreneur will be the cost of interest outgo. To save on the interest outgo will be that you could leverage the sundry creditors and advances from suppliers. These two factors, I have seen people, who have a good reputation of timely repayment, that they have the limit from the bank, but they very well manage with, advances from the sundry creditors and advances against suppliers. So this is the second way of not taking actually advances from the bank and saving on the interest. The third is to explore the possibility of finding out whether the non-fund based facilities such as bank guarantees, LCs, which are much cheaper, can be leveraged. Because when you are taking a fund-based facilities, they have a cost, and the cost is appreciably more than that of the non-fund-based facilities. So obviously, if there is a provision for bank guarantee, you have to pay one-time commission, nothing else. And against the bank guarantee, the supplier gives you your raw materials. And he's sure, because if the repayment is not paid, he invokes the guarantee and gets his money. At the same time, the borrower is able to save money by not taking any advances, but taking a which is a letter, non-fund based facility, which is a letter, give it and getting his purpose solved. For the entrepreneurs who are a little more well settled, another line of credit which is cheaper is the foreign lines of credit, which are linked to LIBOR and which carry much less rate of interest. They must, am I running out of time, Mr. Sanjeev?
We are out of time, but anyway, sir, maybe another 1 or 2 minutes is okay.
Okay. I got a little disturbed because there is a noise over here. So that's okay.
Yes.
In the beginning. So when it comes to the, I'll complete the 3 questions. That's why I cut short and I came to the questions. So that is one. And if you have a buyer's credit or a supplier's credit, where the overseas, like in the United States, if you are taking a loan normally, it wouldn't cost you more than 4 to 5%, I guess. Whereas the cost of funds over here from a banking system would be nothing less than 10 to 11% over here, maybe 9 to 11% varying. So that's why if you can explore this possibility, then it would save also. The other factor which can be done also is channel finance. Channel financing puts the credit risk on the OEM or your suppliers, who have a better capacity to negotiate with the bank. And because they are established in the business, they can have a line of credit wherein the bank actually, in case of default, recovers the money from the OEM. Okay, here also the rate of interest is less. Now, regarding delay in credit realization, what can be done is, this is a tricky situation. This is a tricky situation because you are making supplies to a OEM, you are making supplies to a purchaser, and that, the moment you have a confrontation or a litigation with them, your purchases are stopped. So you can't really do that. So alternatively, what could be done is if your persuasion fails, you could have a bill discounting facility with the bank, which carries much lesser rate of interest than the fund-based facilities such as a term loan or a cash credit account or a demand loan. So there you get the bills, and preferably with the acceptance. Once I deliver the goods, I draw a bill of exchange which is accepted by the OEM, which is accepted by the purchaser. That is discounted with the bank, which carries it. And banker is also comfortable because he has access for recovery both to the borrower and to the OEM also. The third point is, which you said, choosing the right product. Yes, we have the plethora of, the bankers are having schemes wherein there is a literacy which is being imparted, financial literacy being imparted by holding camps in different places. They are having agencies, Government of India, Skill Development Authority also is having, Skill Development Authority is also having schemes such as the RCETs, where we go to the villages. We sponsor a lot of schemes wherein the financial literacy programs are being given. And I'm sure with time, this would come. The only warning factor is that the NPAs in these cases are rising. And in the last financial stability report of 2021, the RBI has warned that there is rising NPA in this particular. I mean, if I am to say the 1, 2, or 3 factors, one is that when the bankers entertain and when the entrepreneurs are embarking upon a project, they have to be sure, and it pays well to go to an expert and take an advice regarding his profitability, his marketing, his resources, whether his inputs will be available or not in its entirety, to see that the techno-economic viability report is properly prepared, instead of rushing into it and thinking about it later on, and to have comprehensive idea about the business instead of going there without the adequate knowledge about it. So the NPA, which is, for the banking system, would be probably 7 to 8% at this point of time. It is 12 to 13% for the SME segment. So with these words, I welcome any questions, and thank Resurgent India and the FAI for the opportunity for me to have spoken to all of you. Thank you.
Thank you, sir. I think it was really nice to hear from you. As a banker, you have a lot of insight into what generally goes wrong when these MSME customers present their proposals in front of the bank, and therefore the need for a proper presentation. There is an information gap which anyway exists between an entrepreneur and the banker. How do you bridge that? Proper presentation of your plan to the banker is important. And at the same time, some of these, ways that you have advised in terms of keeping the interest rate lower by maybe looking at multiple options, even using a bill discounting if you are getting stuck up in terms of your receivables from your large corporates. So bill discounting is definitely a good idea for some of these MSMEs who are getting delayed payments. And at the same time, getting to know these, see, most of the entrepreneurs, whether you are technocrats or even the marketing people, you need a proper advice. So, the finance requires, either you get yourself aware of it, which might take some time, benefit from certain, training programs, which means a lot of time the government, banks are also organizing, so you can benefit from it. Otherwise, it is always better to go with a proper advisor who can guide you through the entire process. And it makes a lot of difference in terms of the quantum of loan that you need, the tenor of the loan, what kind of best interest rate that is possible in the market, what government schemes are available. So if you ask me, the government sector, is there to help MSMEs. There are a lot of schemes coming up, already available. Most of the entrepreneurs don't get to know these schemes, how to benefit from it. Same time, banker, whether it is public sector bank, all banks have different cells to handle MSME proposals. There is a lot of improvement which is happening. At the same time, we have these tech platforms which are coming up, which is making instant credit delivery is a reality. I mean, Vinay has already spoken about it, that some of these things which was used to take months, with the help of the technology, these things are being, the credit are being instantly delivered. So, from the lending platform side, a lot of these developments are taking place. From the entrepreneur side, understanding, how best you can present your proposal to the lenders, what you really need, and planning it well. I mean, what Chaitanya said, plan well, and I think a lot of these things can fall in place. With that, I think I will, stop for today. Maybe if there are some Q&A, some questions from the participants, we'll be happy to take it up. Rohan, do we have some questions?
No, sir, no, we don't have.
Okay. I think with that, and close the session for today. I must thank you, Vinay, Ashok, and Chaitanya for coming over, delivering this session today here. A lot of things to learn from all of you with your experiences here. And thanks a lot to all the participants for coming over and hearing us. We will be happy to get queries from you. If not today, maybe even in future. If you have something, do drop us a query. We'll be happy to assist you. Because as I said, the role of advisors is important in this entire process. So anytime any of you require some assistance, please feel free to connect with us. We will be there to assist you. With that, I would like to close the session. Thanks everyone for participating in today. Thank you.
Thank you.
Good. Thank you. Thanks.
Thanks.